Welcome back to the Mortgages AF podcast, a weekly mortgage market update. I'm joined again by Stuart, and we're going to discuss the market in general and some rates. How you doing, Stuart?
Yeah, I'm good, thank you. I'm good. It's Friday. It's sunny. Ready for the weekend.
It's sunny but cold. Probably one of my least favourite combinations. How's the mortgage market been for you recently?
Mortgage market's been good. It's been getting busy again. Getting lots of inquiries. Rates are still coming down in many areas. So looks like we're getting our feet back again. And yeah, predictions are not looking bad either. So yeah, what about you?
Yeah, it's really busy. I was actually speaking to a broker yesterday, and she was saying how busy um, she is and how she was surprised. But I think that's pretty much how the market is at the moment. Everyone's got a bit of faith back. The people are going out and viewing properties again, and rates have come down, and that's the main thing. Like, rates are continuing to come down. So I think the lenders have played a very good game here. They've not gone straight in for let's just plow the rates back down to 2-3%. They've gone, well, no, let's drop them down a bit, and then a bit more, and then a bit more, and they're just gradually doing it rather than them dropping back down to 2 or 3% and then coming back up again immediately because something else happened, the base rate goes up and things like that. So it's been really well managed, I think, and it should mean a bit more stabilization, which is the main thing. So we're not seeing rates going all over the place all the time, and obviously the economy is. I was going to say doing well. I don't know if that's quite right. It's not, I wouldn't say doing well, but it seems that we're certainly getting in a better place. So yeah, I think it's been a good start to the year, and I'm only seeing positives at the moment.
Yeah, no, me too. And I've talked to a few lenders, the same as any other broker will do, and yeah, they're feeling really quite comfortable with everything at the moment. And we're in a few weeks' time, we're looking at a new statement from the Bank of England, and I don't think anything that's going to come out of there is going to affect the rates either, from what I can understand. So, yeah, it's like really sort of stable at the moment. So
Yeah, of course. I mean, who knows, but I think you're probably right. I think even if the base rate goes up again, I think the banks are all prepared for that, and I think they're thinking ahead a lot more than and they're planning their rates accordingly rather than reacting, which we were seeing quite a lot of last year. But yeah, happy New Year to you, Stuart.
yeah, happy New Year back, straight back to you.
Right, so we are going to talk about rates a little bit today. We are going to go through a couple of the rates that are available on the market at the moment. Obviously, we're not going to talk about which lenders they are from because we don't want people to just think that they can run out and grab the product that we're telling you about because it might not be the right one for you. But it should give people a rough idea of what's going on. It's been a little while, so we've not done an episode in a good few weeks because we had Christmas and New Year, and then we've been inundated with work ourselves because we obviously both work as mortgage advisors. So it's been busy, and we're just trying to get back into this. So I can't remember what rates were like. I can't remember how high they were. I should have listened to the last episode before we did this one, but I know they were probably higher. Almost definitely, I can say with confidence that they were probably higher last time we were talking about it. So, what's the rate you've got for us? What's the product you've got for us today, Shia?
Product this morning I was quite impressed with was a 2-year discounted mortgage of lender at 3.69%. So it wasn't that long ago that we was looking at rates getting close to 6%. I know that's probably more on a fixed rate,
Mm.
but on a discounted rate, which will sit just below the variable rate, I thought it just gives a good feel of where we're coming back to.
Mm. So, that's something to mention. So people might have heard of fixed rates and tracker rates. Fixed rates are obviously the most common. Do you want to just give us a high level of what a discount rate is?
Yeah, discount rate is where you've got a variable rate from a lender, and let's just say, for instance, in this case, it was 4.5%. They'll discount their rate by a certain percentage. So in this case, it could be that it's dropped down from 4.5 to 3.69. So you'll be paying below their variable rate. However, if their variable rate increases, so will your mortgage payments. Flip side to that is if it reduces, it will also reduce as well. So it's a percentage below their variable rate. So it is more volatile potentially than a fixed rate. Um, However, people do use these for a period of time for certain reasons.
Yeah, I think that there's a few interesting things to touch on there that you've mentioned. The fact that it's related to the variable rate, not the base rate. So obviously the base rate is controlled by the Bank of England, which is how a tracker works. It tracks what's going on with the base rate, whereas a discounted rate is linked to the lender's variable rate, which means that it won't be influenced by the base rate directly. Although you could argue that the standard variable rate is probably influenced by the base rate in some way, but the
Yeah,
lenders control it. So just because the base rate goes up doesn't mean that the variable rate will follow. So a lot of lenders haven't put their standard variable rate up, despite the Bank of England base rate going up. It depends on a lot of things, not just the base rate.
yeah, correct. Yeah.
Perfect. Yeah, I mean, it's really good product to mention. A lot of people are looking at these variable rate products at the moment. A lot of the time they don't have early repayment charges, but not always, but a lot of the time they don't. And it means that people can get that slightly lower rate and potentially take advantage of it instead of the fixed rates for 2 or 5 years,
Yeah,
because they're obviously quite high at the moment. So yeah,
yeah,
I
yeah,
think it's a good rate to mention.
yeah. What have you found, Mark?
So I have found a product which I don't. I've got to admit, I've never. Well, not never, but I've not done many of these types of rates. So it's a 10-year fixed. So obviously, fixed rates are what we do a lot of in the residential world. Most people want to know what their outgoings are going to be, and therefore fixed rates tend to be the right solution for them. Um, but most people don't want to fix it in for 10 years. It's hard to say nothing will change in my life in 10 years.
Yeah,
So that's a very big statement to make. Nothing will change, and I won't need to change my mortgage over the next 10 years. Because if you do try and change your mortgage over the next 10 years, you potentially are going to have to pay early repayment charges on a product like this. So it's a great product, and the rate is really good. So the rate is 4.1%, which is really low
yeah,
compared to what we've been talking about previously. For 4.1% is really low, but when you're saying it'll be 4.1% for the next decade, that could potentially be really high. When you look at a year ago what interest rates were like,
yeah,
and people were paying 1%, 2%, that kind of thing, saying I want to be on 4.1% for 10 years is a massive commitment to make, and I don't think it's for everyone at all. But it is out there, and I think it shows that there's a lot of versatility in the market. You've got rates that are 2 years and 5 years and 3 years; they're really common. But you've also got these longer fixed rate products for
yeah,
10 years as well.
yeah. Yeah, listen, 3 or 4 months ago, there could have been people biting your arm off for that rate for 10 years.
Right? So yeah, I think it's a good rate. It's a good deal. If you can justify being fixed for that long, then it will do a good job. But there's no guarantees that rates won't drop below 4.1% over the next decade. So it is a big, long commitment to make at a comparatively high interest rate compared to what we've had the last decade. If you look at the rates over the last decade compared to the having 4.1% over the next decade, then you're probably going to see quite a big difference there.
Yeah,
But yeah, I mean, I think these two rates really show that the interest rates are coming down. We get, I would say, almost daily, I get an email from at least one lender saying that they're reducing rates on some product, whether it's a buy-to-let rate or a residential rate or a product transfer rate or whatever. But we're seeing a lot of rates coming down, and not many going up.
yeah. No, that's right. Yeah, and the one thing that we may see a slight change on might be the variable rate.
Yeah.
Um, but apart from that, yeah, everything else is only been going one way at the moment, and it's not to say that it's going to carry on going that way, but
Mm.
yeah, there was a big feeling in probably end of September, October last year that they was just going to be rising up into the 8s and 9%, right?
Yeah.
Um, which has not happened at all. So
No,
um,
definitely not.
I'm sure a lot of people got a lot of different views on that, and what happened and where it could be and where it should be. But we are where we are, and actually we're not in a bad place now.
Yeah, absolutely. And I think the other thing to mention is that there's a lot of people buying and selling now, so it's not it's definitely not tailed off the way it sort of got predicted maybe 3 or 4 months ago. So I think everything's still moving. The interest rates are there for people that want them. The one thing that I was talking to someone about the other day, and we'll just touch on this before the end of the episode because I try and keep these quite short, but um, the amount of people that are on the standard variable rate is incredible.
Yeah,
So I don't know the exact numbers. Maybe I'll try and find out for the next episode. But the amount of people that are sat on the standard variable rate when they could be on a fixed rate or they could be on a discount rate, and pretty much guaranteed the discount rate, well, it is guaranteed a discount rate will be better than the standard variable rate because it's a discount off the standard variable rate. So why wouldn't you rather be on that than a standard variable rate? Um, and it's incredible. And the one thing I can say is if you're on your standard variable rate, speak to a professional and see what can be done because you probably don't need to be on the standard variable rate.
yeah, no, that's correct. Yeah, and even if you find a product for a temporary period, as long as it's got no early repayment charges on it, that's people are looking to sort of keep money in their pockets at the moment, and there's ways out there of doing that.
Yeah, I mean, we're talking about the obviously the living cost crisis, and if you can save £50 on your mortgage payment every month, then that could potentially help towards the cost of living, the increased energy costs, everything that's going to happen this year that we know is going to happen this year. So,
Yeah,
I think it's definitely worth speaking to a professional, having a review. If you're looking for a broker, obviously we're your first choice, but you can probably find a local broker, or you can obviously just give me a call.
yeah. Well, listen, they're never going to be as nice as us, are
No, exactly. Who could be?
they?
But yeah, you can speak to a professional wherever you want. But I highly recommend you do speak to someone. Was there anything else you wanted to add to that about this week?
I don't think so, Mark. I think it's crack on to next week and let's see what happens.
Cool. I'll see if I can find out that stat for next week as well. And we'll catch you all then. Thank you so much for joining us for the Mortgages AF podcast, as always. And we'll see you next time. Cheers. Bye bye.
Take care. Bye bye. Bye bye.